Hey guys, it is Julie here with TipRanks, and today we're taking a look at a couple top analyst stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks that have been in the red the last few months, but recently have been picking up a lot of attention from Wall Street analysts, including some 5-star analysts as well. So we're going to take a look at these companies, what it is that they do, and what those Wall Street analysts are predicting for their stock's future. We found today's stocks over on the top analyst stock page on TipRanks. Found under investment ideas, here you'll find stocks with a strong buy or strong sell rating consensus according to the best performing analysts. You'll see the consensus by sector, with technology and energy being at the top here, and then down below, analysts' most recommended stocks. Don't forget, you can also stay up to date with all the latest stock news on the TipRanks mobile app. Links will be in the description down below. Now let's get right into our top analyst stocks. First up is Axonics Modulation Technologies. Their stock trades under the ticker AXNX, currently priced at $50 per share. They are down 26% overall in this past year. They did see some gains here going into the summer, but have been cooling off recently, down 19% in the last 3 months. Axonics is a medical technology company. They specialize in the development and market introductions of solutions for various urological and pelvic health conditions. The company offers two main products. The first is the Axonics Systems, which is an SNM therapy. This implantable neurostimulation device is specifically designed to provide long-term relief for patients suffering from overactive bladder, fecal incontinence, and urinary retention. Their second product is Bulkamid, which is a gel treatment specifically developed for female stress urinary incontinence. They just shared their Q3 earnings report on October 30th, and they shared positive earnings for the very first time. For their Q3, they reported earnings per share of 8 cents, well ahead of the loss of 5 cents that analysts were anticipating. They also had revenue of $93.1 million, which was an increase of 32% year over year. Their CEO said that their growth was driven by higher utilization and share of wallet at existing customers and onboarding of new accounts. Based on the strong results generated in the third quarter, they raised their fiscal 2023 revenue guidance, representing growth of 32% year over year. And following this report, we've had a handful of Wall Street analysts weighing in. One analyst from Baird reinstated the stock as a bullish fresh pick. They said they continue to see upside to their 2024 and 2025 revenue and profit estimates on now higher numbers after the company again beat CNS estimates and delivered second quarter in a row of positive adjusted net income. One analyst from Leerink also reiterated their buy rating. They said that overall, Axonics represents an attractive, high-growth medtech story that offers a clear path to profitability beginning in 2024. They're developing and commercializing novel products for adults with bladder and bowel dysfunction and is bringing best-in-class products to a large and under-penetrated commercial opportunities. The Axonics stock currently comes in as a unanimous strong buy with 8 current analyst ratings. With an average price target of about $70 per share, that would be an upside potential of 41% from current prices. Down below, we can see 5-star analyst from Piper Sandler recently gave the stock a buy with an upside of about 50%, and there's another price target around there. Our low-end price target comes in with still a 25% upside. Our second stock today is probably one you're a bit more familiar with. That is none other than McDonald's. Their stock trades under the ticker MCD, currently priced at $261 per share. Now, overall, the past year, they're only down 2%. They did see some growth going into the summer, but in the last few months here, they have been cooling off, down nearly 10%. McDonald's needs little to no introduction as the world's leading fast food chain restaurant. They operate in more than 100 countries with over 30,000 restaurants around the globe, serving their popular items like the Big Mac and Quarter Pounder with cheese. And they also just reported their latest quarter on October 30th, where they came out with an earnings beat. For their Q3, they reported revenues of $6.56 billion and earnings per share of $3.19, coming in 19 cents ahead of analyst expectations. They also saw their global system-wide sales increase 11% for the quarter, and their consolidated revenues increase 14%. They said that the macroeconomic environment is unfolding in line with their expectations for the year, and they continue to deliver convenience and value for their customers. Thanks to the entire McDonald's system's outstanding execution of their Accelerating the Arches, they remain confident in the future and strategic direction of the business. Following this quarterly report, one analyst from Deutsche Bank increased their price target on the McDonald's stock. They said that the firm likes McDonald's defensive business model and value proposition and sees the company as well positioned to maintain global momentum and same-store sales outperformance irrespective of the consumer environment. Another analyst from BMO Capital also reiterated their buy rating. They said that the company's growth momentum remained strong across all geographical locations, even amidst a challenging environment. They also updated their 2023 outlook, raising their operating margin guidance, reinforcing their position as preferred defensive pick. They also highlighted their ability to drive robust global sales growth, capture market share, and expand operating margins, even in the face of challenges. McDonald's has picked up a bit more attention from Wall Street, with 27 current analyst ratings coming in as a strong buy. That breaks down to 22 buy ratings and 5 holds. With an average price target of $310, that would be an upside potential of over 18%. Down below, we can see a lot of these ratings all coming in the past couple days following that earnings report. On the low end, we do have a buy rating with an upside of 6%. The lowest holds actually at 11% there, and some high-end price targets, including upsides of 46%. So there we have two stocks coming in with a strong buy consensus from Wall Street, with a lot of analysts weighing in recently. Let me know your thoughts on these two companies and what you think about their future growth potential. I always love hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at. So please make sure you're always doing your own research and due diligence and sticking to your own investment plan. Thank you guys so much for watching. I hope you have a wonderful day, and I'll see you back here next time.